Recording this.
Okay.
Where'd you go, Leo? Share my screen. Okay, cool. Can you guys see my screen that I'm sharing?
Yes.
Thumbs up. I'm just gonna have this on the side. Just getting set up. Okay, so today we're going to talk about labor burden, more specifically what it is and how to calculate it. I'm presenting it. Special thanks to Adam from E2. He also helped contribute towards building this out. So he's not here today, but just wanted to give him a special thanks. For those of you that don't know me, my name's Leeroy. I'm the co-founder of Check the Level. Basically, I come from a family of small business owners. I mean, my dad has over 40 years of experience in construction. So a lot of the values and the problems that we're solving at Level are the problems I saw my parents struggle with as I was growing up. Particularly around money management and cash flow and knowing their numbers, that ultimately inspired me to follow a career in business. So I've qualified as a chartered accountant from KPMG. I've also done my MBA at the University of Toronto. As I mentioned before, I'm the co-founder of Check the Level, which provides job costing and bookkeeping solutions exclusively to small business contractors, small to mid-size. Cool. So a little bit of an agenda today. Today, I'm going to walk through the labor burden definition. Basically, what is it? Then I'm going to talk about, I'm actually going to walk through a tool that I've created that's going to help calculate the labor burden for you. And then lastly, I'm just going to show you, on our roadmap at Level is we are going to start incorporating labor burden and the dollar value of labor in your sort of scoreboards, or at least your tiles. So I'm going to show you where you can actually start to store that information so that when we roll that feature out, it's easy for you to just get that information immediately. Does anyone know what this is on the right?
Your P&L?
Yeah. What's unique about this? What's unique about this P&L? I'm going to be asking quite. Yeah.
It's your chart of accounts.
Yeah, there you go.
Management accounts. Okay, I got a question. What's with the asterisk on all of them? I've wondered that ever since they're set up.
It's just to show like, hey, this is the Level one. And also when we import the chart of accounts into your file, it prevents any duplicates, because sometimes you might have like subcontractor expense there already. Yeah. So it just prevents us like from missing anything. And it's a quick way to tell, like, is this a Level line item or not, right? So ideally you're not booking to anything that doesn't have an asterisk to it.
Perfect.
Cool. All right, so let's dive into this. Before we talk about labor burden and what it is, it's important to understand the different types of cost categories you have in a business. So really, there are two primary cost categories that you guys need to keep in the back of your mind in terms of like a fundamentals around the types of expenses that you incur in your business. I categorize them into two types. So one is your break-even costs. So break-even costs fall into two categories, right? There's fixed costs and there's variable costs. Now, when you calculate your break even, the formula asks, hey, what are your fixed costs? What are your variable costs? So it's important to, if we ever go down, I'm sure we'll talk about break even in the future. It's important to keep that in the back of the mind that when we're talking about break even stuff, we want to be talking about those two types of costs. Now, what are fixed costs? Who can tell me what fixed costs are?
Like your building.
Yeah. Costs that don't change, the cost doesn't change depending on how much work you have.
Okay.
It doesn't.
Yeah.
Or if you have no work,
Yeah.
still gets paid.
Yeah. Another way to say that is sometimes, a more like accounting way to say it is costs that don't change within a specific range of production volume, right? Sometimes, if you go from $1 million to $2 million, or like $1 million to $10 million business, you might need to like start paying your PMs more because they're managing more. So it's still a fixed cost because it's a fixed cost within specific ranges. But it's important just to remember that sometimes people get confused, but it's like, hey, I'm paying my salaried employee more. Doesn't that make it variable? No, it's within specific ranges. Okay, what are variable costs there? Who wants to take a stab at that?
Labor.
What type of labor?
Well, like your construction worker labor, billable labor, yeah.
Hourly, like, yeah.
Yeah.
Any cost that fluctuates with revenue, I guess, that's associated with the revenue. It's interesting. I've always thought that break-even costs were always fixed costs, not there wasn't really variable costs within it.
Yeah, we'll talk about break even another time. We'll actually get more. We'll go into the full definition of that later on in another session, maybe the next Q&A. But yeah, you're spot on. A better way to actually define variable costs is costs that change with your production levels, because sales, although if you produce more, you hope your sales increase, it's not always the case, right? Especially for like non-billable activities. All right, so moving away from your break-even costs, we're going to talk about your project or job cost categories. Oh, there's a typo in there. That is supposed to say, no, that's not a typo. Sorry, I'm just reading it incorrectly. They look identical. So you get two project or job cost categories, right? Those are your overhead and your direct costs, right? What are direct costs?
Material.
What you incur for completing the work.
Yeah, exactly. I'm going to give a broader definition of overhead a little bit later, but like, what would overhead be considered?
All the things that have to go into a job that are not necessarily specific to the exact job. Things like your admin cost, or would that also include things like rent and stuff like that? Yeah.
So you're on the track there. So I'm going to help just break that down, but you got most of the pieces there, Karen. So I'm not going to focus on break-even costs today. We're not going to focus on that. That's a separate topic that we can focus on later. Today, we're going to focus primarily on project or job cost categories, because this has a significant impact on your understanding of labor burden. All right. So basically, the definition of direct costs, like you guys pointed out, it's those costs that are required to actually perform the work like that, but that can be easily and conveniently traced to it. So direct costs, as it says here, are job costs that can be easily and conveniently traced to a specific project or job. For example, materials, subcontractors, and field staff wages. The other thing to bear in mind is direct costs are often variable costs. Most of the time, your direct costs are variable costs. So as you produce more, you would incur more of these expenses. Another great place to find direct costs are in your estimate, like especially if you're estimating based on like hours or the cost of the material. Typically, any costs that can be like accurately estimated that doesn't require like a percentage or something like that, that is a direct cost. Moving into overhead. So overhead costs are costs that cannot be easily assigned to a project or job, if at all. Sometimes some costs cannot be allocated to a job, right? With that in mind, the way to think about overhead is there's actually two types of overhead. The first overhead is your indirect job costs. So these are costs that you incur to perform the work, but it's hard to trace to a specific job, right? So like, for example, if you're leasing a vehicle, like a field vehicle, you need the vehicle to perform the work, but it's hard to go, okay, like how much of this vehicle do I need to assign to this job, right? Other examples could be like workers' compensation, any sort of like, it's effectively any costs that are required to perform the work, but you can't trace to a job. The other one's like small tools and equipment, right? Like you might use a piece of machinery on multiple jobs, but it's hard to like put it to a specific job. Then the other type of overhead that you have is I just call it other overhead costs. And we're going to talk a little bit about how those are made up. Continuing on the overhead definition, as I talked about, indirect job costs are costs that are difficult to trace to any one specific job, but need to be incurred to perform the work, right? And then the last one, other overhead costs are just other ongoing business expenses like material and general administration expenses. In terms of a rule of thumb, if you want to differentiate between what are indirect job costs and what are other overhead costs, the way I like to think of it is any costs that are incurred in relation to your field staff or your production staff, that's indirect job costs. So anything that your indirect field staff are effectively incurring from an expense perspective needs to be considered as indirect job costs, because that's the expenses that they need outside of gross wages to do the work. Your other overhead costs typically deal with your office or administrative staff, even owners to some extent. Right? These are like your software subscriptions or office rent, your utilities, those sort of things, right? So it's, if you're ever confused whether this is like a like an indirect job cost or a overhead, just think about like, okay, well, who's taking the lion's share of utilizing this expense? And if it's the field staff, then you know it's indirect job costs. Just going to pause there, see if there's any questions with that. And if that makes sense, or if it doesn't, if you want me to work through that again.
Yeah, it's good. Yeah, it seems like other overhead costs are kind of, as Jordan explained it, like whether or not you have a job, you have to pay those, right?
Yeah.
And maybe indirect job costs are the same. It's just that they're like allocated to the field staff, like production. They have a foot in production.
Yeah. Cool. So with those in mind, right, like knowing now what are your direct costs and your overhead, if you have a clear understanding of those definitions and knowing that like overhead is made up of your indirect costs as well as your other overhead, you have the foundation on like going, okay, like what is labor burden, right? So when we look at the definition of labor burden, it's effectively trying to calculate all those indirect job costs associated with hiring a field or production employee, right? Effectively, like what are the expenses I need to incur outside of gross wages? As you can see, labor are employee costs other than gross wages, so not like the hourly rate that you pay, which is calculated to use the pay rate. What are the other costs incurred with hiring a new staff? Like if you had to bring on a new employee, outside of paying them the hourly rates of $30 or whatever, what are the other costs you have to incur to hire this person, right? So that they can do their work. Labor burden is those other costs. Cool. So examples of labor burden, right? I've written tax here. So like any employer contributions to like tax plans. In Canada, it's like EI, CPP. Your leave and vacation. So, effectively, whenever you have like an employee, like a W-2 or anyone that's on a T4, you have to accrue vacation based on whatever your vacation policy is with the employee. That is an indirect cost because it inflates the cost of the gross wages based on that vacation rate. Field staff insurance, like workers' comp or whatever, that's also another example. Small tools and equipment that they need to get the job done. That's also an example in field vehicles. What other examples of like costs that you need to incur for a new employee to do their job? What other examples come to mind?
Training and staff meetings, like anything like that.
That's a good one.
Safety equipment, or perhaps if you have any health benefits that might apply to them.
Yeah, exactly. That's a good one too.
Uniforms.
Yeah, that's a classic one. All right, I think that covers quite a lot of them. So okay, so you guys understand like what we're trying to figure out is like from a labor burden perspective is, hey, what are these other costs that I incur when I hire a new employee so that they can do the job, right?
Would marketing, your marketing cost to get the employee be included in that?
No, because that's not a cost that the employee is incurring to do the work, right? That's a cost the business is incurring to get an employee to do the work.
Okay, thank you.
Yeah. It's more on like, once the employee is hired, what other costs do I have to incur to get this employee outside of gross wages to do the job?
You put in bonuses as well?
Yeah, bonuses would be one. That's a good one. Cool. So coming back to this whole concept of like a new employee, right? So if we had to like look at like the true cost of an employee, hiring a new employee, what we would say is the cost of hiring an employee equals their gross wages, so whatever we've agreed to pay them as an hourly rate, plus their labor burden costs or their indirect job costs, or indirect employee costs. Now, when we look at the labor burden formula, what we're looking at is your labor burden percentage equals your indirect costs. So all those other costs that you have to incur on an employee to get them to do their work, divided by their gross wages. So it's a percentage that we're inflating gross wages by to estimate the true cost of hiring this employee, right? And when you think of it that way, what ends up happening is the cost of an employee then becomes your gross wages times by 1 plus your labor burden percentage, right? So I'm going to talk, and when we come back to what your labor burden percentage is, it's this. It's effectively saying for every $1 of gross wages that I incur with this employee, on average, how much indirect costs am I incurring? So if it's 50%, that means for every $1 that I spend on like a gross wage, an hourly wage rate, 50 cents is also spent on other indirect costs. All right, so before I like dive into the calculator that I've built for you guys, any questions with those basic fundamentals and terms?
Yeah, hey, Leeroy, can you go back one slide to the formula that you had? Yeah, that one. Thank you.
Yeah. I'll be sharing this afterwards. So does that make sense, Phil, that formula?
Yes.
All right.
Thank you.
No worries. Okay. Any other questions? All right. So with that in mind, I'm going to move to the labor burden calculator. Now, there's going to be a whole bunch of numbers here, and I'm going to work through it slowly. People do labor burden in different ways. When I've bought this thing, I've gone from the perspective of like, we know the ins and outs of payroll expenses really well here at Level. It's a hot topic always. So I've taken it from like my understanding of how payroll expenses work. And then you'll see I've broken it into two different sections. There are other ways to calculate this. I focused it on in Canada, but I'll show you how you can tweak it for the US as well. But basically, when we come to this labor burden calculator, I want you to remember the formula that I showed you earlier, which was, when we look at this formula, effectively what we need to do is define what is gross wages, right? Or actually, sorry, over here, this is what we're looking at. The first thing we need to define is like, what is gross wages? What is the gross wages we pay an employee, right? So to calculate that, effectively what you need to do is like look at, okay, well, what are the total hours in a year that an employee could work at 100% capacity, right? Okay, when an employee worked every single day, what is the most that I could pay them, right? So here, what we're doing is we're saying, okay, there's 2,080 normal work hours in a year. And I've assumed that, hey, okay, worst case scenario, this employee is like 100% efficient. I'm paying them all the time. They're not taking unpaid days off, right? So that would then become the total normal hours adjusted for efficiency. Now you can change this for efficiency if you assume like, okay, maybe the employee only works 4 days a week. Why only pay them for 4 days a week? You can make that adjustment, right? The other important variable to take into account here is your vacation days. So how many vacation days have you given this employee? Because effectively, regardless of whether you pay vacation days out or accrue them, every time an employee earns, you pay an employee, you have to give a space, depending on your vacation policy, you have to accrue a certain percentage of their salary towards vacation. That's even like if an employee didn't even take any vacation out for the whole year, right? Like they just work every single day of the week, you would still have to accrue that 4%, right? The 4% is only there if they take leave, and then you need to pay them out for that leave. Does that make sense, this section, before I sort of look at the others?
Quick question.
Yeah.
Does that, if we're not saying we're accruing vacation time, we're saying and stating it as a sick time, same concept?
Yes, and this touches on, I know Chris asked this question and I was hoping to bring this up. So the idea here is we've looked at a full year, right? So there's 52 weeks in a year, and there's 5 business days in a year. Now that's not really reflective of like what actually happens in reality, which is, okay, some days we don't pay them because they're on sick days, or some days it's stat holidays, so we don't pay them on stat holidays, depending on what region you're in or what your legislation is. So what we're saying here, at least in this example, I'm saying in the worst case scenario, if my employee worked the entire year straight up, and they every single business day they worked, I would pay them effectively for 2080 hours, 2080 hours. Now your efficiency adjustment, you can start to go, okay, well, maybe, there's 11 stat holidays in a year, so you can make an adjustment for that. And if you don't need to pay them on those days. But the important thing that we're trying to define here is, if at the end of the year, we had to look at what we paid our employee based on their hourly rate alone, what would it be? So you need to sort of incorporate like the stat holiday. So here, this is overstating their gross wages because, they might not work every single day. Does that concept make sense?
It does.
Yeah. So go ahead, Athena.
I was just asking in regards to vacation as opposed to sick. I don't know about in other states, but if we were to give them sick accrual time, deciding if we choose it to roll over, do they continue to have that rollover, and then do we pay it out after a period of time if they decide to leave, as opposed to vacation is something that we have to pay out no matter how long they've been with us? That was the only reason why I was asking that.
Okay.
But carry on.
Cool. Jordan, what's up? What was your question there?
Yeah, I think after, is there something to account for how long they've been working? Because I think after 5 years, they're entitled to a bump up on their vacation accrual, right, to 5%, at least I think here in Manitoba. I think it's something like that. They get an extra few weeks of vacation pay. Would there be something do you just have to manually adjust that when they've worked that long, or is there some way to make sure that's, if this is getting refreshed every year, say like how many years have they worked? I guess it might be different locationally.
You would want to at least every quarter like review this labor burden calculation, because again, your overhead might change on that employee too. You might be, you've decided to give them better health benefits or whatever the case may be. You should be adjusting this on a routine basis, or at least reviewing it, right? And again, like if it moves to 5% or whatever it is, when you change like to 15 business days, this whole the thing changes, right? The variables change. So it is plug-in. What the yellow cells are what you can effectively update, the gray cells are not.
Okay, so how would you change that?
So if you would just need to define, okay, if they move into like,
or you just add how many more paid vacation days.
Yeah. So if they went to 12 days, you'll see it changes to 4.8%, or 15 days changes to 6.2.
Oh, okay.
Yeah. It's all formula driven. Cool. So once we've defined how many workable hours, and then this is the conservative approach. If you're ever like confused, like unsure of like, okay, what is the best way to do this? The conservative approach is to assume like they're going to work through the whole year. But you can make some adjustments to that. Once you've defined the workable hours in a year, or the normal hours in a year that you expect them to be paid on, effectively, the next step is to calculate their total gross wages. So you would put their labor rate in here. So, okay, I'm paying an employee $30, and I expect to pay them $30 over 2,080 hours in a year. So what I would expect at year end, if I looked at my gross wages, I would expect to see about a $62,400 gross wage expense. So that excludes, that's just their hourly rate, right? There's no other indirect costs. We're only looking at gross wages here. Does that make sense? All right. Okay, cool. So then the next phase is, okay, well, we know what our gross wages are. Now we need to figure out our indirect costs. Now, when I think about indirect costs for an employee, there's two types. There is percentage-based, which means, hey, a certain percent, this indirect cost is based on a percentage of their gross wages, right? Then there's the other indirect cost, which is their like a dollar-based value. This is indirect costs from a labor burden perspective are employer contributions. It's what is the company contributing towards this employee so that they can get their job done. So when we look at the percentage-based employer contributions, those are typically your employer contributions for any like taxes, any like workers' comp contributions, any EI. Again, that vacation accrual comes through as well. So effectively, I've added some other cells here, and you can also update this based on like your region. So for example, if you're in the US and you're unsure about how to calculate this, one way to do this is just to, Google you could pull up a payroll register, look at all the deductions or employer contributions that are getting made, and just Google those to see like, hey, like what are the percentages that I should be allocating based on this? In this case, it's, I've done Canada, Ontario. So, your CPP is 5% or 5.7% of your wages, and your EI is 1.5%, which would give you your annual costs of, $3,556.80. So when I calculated this, I also have an if statement that says, okay, hey, like what's your estimated wages? And I compare it against your limit. And if your estimated wages are lower than your limit, then you multiply this by that percentage. But if this is greater than that, then you multiply this by that percentage. So I am accounting for the limits. Your field staff insurance or your workers' comp, that could be a rate that you just pull off whoever's managing that in your region. Here I've assumed it's 3%, and this will automatically populate. Now, there could be other percentage-based accruals that employee contributions that you want to add here, as I mentioned before, but I haven't added any others here because I've actually preferred to put them as dollar-based employer contributions. Does this make sense for the percentage-based employer contributions? Cool, right.
Yes, but I have a question on workers' comp.
Yeah.
Workers' comp, to find out what your worker to charge an hourly wage, depending on what their pay scale is, they have a different rate. And so what I've done in the past, and I don't know if I'm doing it completely wrong, is considering for 1 hour of what we pay them times whatever that rate that they gave us, and then it's divided by the 100, et cetera. And then I come up with how much it should be with workers' comp plus his wage. Is that correct?
Yeah, well, we're going to combine all these expenses together, but what you did there with taking the gross wages and times it by your workers' comp rates is effectively what I did here.
Okay, and that's just for a year though, and you came up with an average of a 3%.
Yeah, in this case it's 3, but it's probably higher. This is low. This is one on the lower end,
Yeah.
Especially if you're like in roofing or something like that. Cool. So once we have that, we have a total for our total percentage-based employer contributions or indirect costs. The next thing you want to do is look at your dollar-based employer contributions. So what else is the company contributing to get this job, to hire this employee so that they can perform their work? So some examples are, okay, the company could be contributing employer health benefits. So like portion of that could be getting contributed, cell phone allowances, fuel allowance, anything that the company is contributing to. And it's not an employee deduction, right? Employee deductions are already accounted for as part of gross wages. Those employee deductions get deducted from their gross wages. So that is a whole separate thing that should be ignored in this document. We're strictly looking at what is the company contributing to, right? Not what is the employee contributing to. Now, Christmas bonus, if you give them a food allowance, any tools, vehicles, you could add a couple of other examples here. something to bear in mind also is since you're doing it on an individual employee basis, it needs to be the costs that are specific to an employee. So like, let's, for example, say workshop, right? Like if you got a workshop or like a workshop where you guys do some work before they install something like like a painting workshop or whatever the case may be, that you could put it in here, but just bear in mind, you're going to have to take the rent, the total value of the rent, and probably divide it by the number of field staff employees you have. I would probably treat any rent as overhead as opposed to including it in here, because it can get a little tricky trying to allocate that on a per employee basis. Any other, any questions with this dollar-based employee contribution section?
Can you put your like vehicle expenses in your overhead, not in your labor burden?
Yeah, but it's one. Don't do all vehicles. Again, it's for one employee. Like if one employee is using one vehicle, like if you have to get a vehicle for an employee, then you would include that cost here. Or if your vehicle is being shared among 3 employees, then you would take the cost of that vehicle and divide it by 3. This is strictly on a per employee basis. You want to create a labor burden percentage for each individual employee. That's best practice.
Okay.
So is it a better practice to like that vehicle cost? Like if we have a crew of 4, typically you do that lease and insurance divided by 4, or I mean, maybe this is a Q&A down the road when it comes to estimating if there's a plan for that. Just keeping it as your overhead, so your overhead burden gets increased, but then your labor burden gets dropped by those points, right?
Yeah.
That's kind of, I guess you would have to run a test on both sides and see what generates the most conservative estimate.
Yeah. You just want to put it in 1 or 2 places, right? Like you don't want to put it in, you don't want to double count. That's the only thing. If you're gonna start, because again, there's 2 types of overhead allocation rates, right? There's your labor burden allocation rates, and then there's your other overhead allocation rates. And you don't want to double count overhead in each of those, right?
Yeah.
Unless you want to be conservative. But the goal here is, right, like you don't want to outprice yourself with the market, but at the same time you also need to factor in errors. So it's like ideally you've got a good science behind like, okay, how to allocate everything, but you're also, when you're estimating, taking into account like any error factors, right? Like confidence intervals of like, okay, I'm generally 10% off of what I estimate, so I'll inflate everything by 10%.
Yeah. So choose kind of one or the other is okay. Yeah.
But yeah, the most important thing here is it's on a per employee basis. Yeah, it's not your aggregate to all of them. We're just looking at one employee going, okay, like if I had to hire this employee, what are the things that they need? Right, so once we have the dollar-based employee contributions, we have everything we need to actually calculate your labor burden, right? So when we come back to this labor burden calculation, what we're doing is we're looking at our indirect costs and we're dividing it by our gross wages, right? So in this case, our total indirect costs are our total percentage-based employer contributions and our total dollar-based employer contributions. So here you have the 9K and you have the 20K, which is going to give you 29K. So basically what that's saying is, outside of the gross wage that I pay on this employee, so the hourly rate, every year I incur close to $30,000 in indirect costs so that this guy or girl can get their job done. Does that make sense? Right.
That's an expensive employee. Yeah.
Yeah. So when what we do is we look at like, okay, if our total indirect costs is 29K and our gross wages is 63K, we can actually calculate our labor burden percentage, right? So here I'm using that labor burden percentage formula. And in this case, the labor burden on this employee is 46.51%. And then if you wanted to convert that into your hourly rate, like your true cost hourly rate, you have your gross hourly rate of 30, and then you just times 30 by 1 plus your labor burden percentage, and you'll get $43 or $44 per hour. Now, the I'll talk a little bit about how to input this stuff into level later, but the most important concepts to sort of, that I would say is really important to understand here, so that you don't get lost in like how to deal with stat holidays and like when people are on sick leave and things like that, is again, it's all about asking, okay, like if I had to think about how much I'm actually going to pay this employee by year end, what is that? And can I assume that they're going to be working, you know, full time all the time? Or like, are there paid holidays? What is it that I'm actually going to end up paying this employee by year end? And again, if you change these efficiency ratios, you know, you'll actually see quite significant changes in your burden rates, because what ends up happening is your gross wages decreases, right? The less you pay an employee in a year because they're not working on those days, your gross wages go down. And because your denominator is going down, but your fixed expenses are staying fairly high, your labor burden percentage changes. So efficiency does have an impact on your gross wages, right?
How does overtime factor into this? Like if there is an average of a certain amount of overtime, will that kind of solve itself in the estimating process if you can estimate overtime hours, or is that something that should be accounted in this labor burden process?
No. I'd have to give some more thought to like what happens in an environment where there's like overtime. Because
I would think, if depending on your estimate sheet, because sometimes I think the one I use, it has like an overtime hours anticipation.
Yeah.
And then that would increase the gross rate, which then the burden would multiply off the increased gross rate, right? So maybe, yeah.
Yeah, now that I'm thinking about this, yeah, your gross wages would go up. I could actually quite easily add like an overtime here, but the thing is, like, once overtime kicks in, then effectively you've got more hours that this employee is working within a year, and then you have to look at like, okay, like you have to come up with like an idea of how many overtime hours you expect this to be, and then see how it impacts your gross wages. It's all about how this adjusts, because everything else, and then if your gross wages changes, then your employee contributions change, but your dollar-based employee contributions would stay fixed. So I can actually I can add an adjustment to this to include overtime if you want.
But I guess if your gross wage goes up, your burden goes down. So maybe it's more conservative not to think about overtime. I don't know. It's a couple steps ahead, right? Like you have to, yeah.
Yeah. The thing is, when your gross wages goes down, your margin goes down as well.
Oh, okay.
So like there's that relationship that if, okay, well, gross wages are going up, my expenses from a direct cost perspective are going up, but my burden percentage is going down. So you might find that they actually just cancel each other out. Any other questions on this tool?
So that efficiency, that's what the employee gets paid and not what you bill for them?
Yeah, because it strictly comes down, like, we're trying to think, okay, how much am I actually going to end up paying this employee, regardless of whether they're doing work that is billable or non-billable.
Okay.
Because you're already accounting for those non-billable activities in this, right? Because they can only work 20, 80 hours in a year. Like ideally, that's what you should be aiming for. Because if you start expecting to increase this number, you don't want to burn your employees out, right? Because then they leave, and then you've got that change management to deal with, which I know that's none of us as business owners enjoy it when a good employee leaves, right? Like it's the one thing that keeps me up at night. Yeah.
One thing.
Someone mentioned bonus. Where would that go in on this? On the employer contribution for a bonus down in there?
Yeah. If it's a fixed bonus, if you know it's a fixed bonus, then you can add it there. But if you pay a bonus out based on like percentage, you can also add it there. But again, this percentage is based on their gross wages. So if you can't calculate it based on a percentage of their gross wages, then just add it as a dollar value here.
Yeah, that's saying percentage bonus would make things a little more exciting, considering it'd be almost on the job. So that might even be out of this realm of this and into another location.
Yeah. But often you should sometimes you want to set a cap on what you can pay them out on, right? Any other questions?
I got one, Leroy.
Yep. Shoot.
So I got a crew that work 5 days a week. Their work week is Sunday through Thursday. They're automatically paid double time on Sunday. So if I take your sheet and, you know, insert a line or a row above your, if you can scroll back up to the top there, please.
Yeah.
So total normal hours in a year. I wonder how I would do that. I'd just add another line, put that hours in there that we anticipate on Sundays, and then just add another. I could add another line on the gross pay rate, and that should all total up again, shouldn't it?
What I'll do, Don, because this overtime question's come up a few times. I can update this labor burden calculator to account, like, to have inputs on like what you think overtime days will be and how many hours. I'll create some additional fields in here so that you don't have to spend too much time figuring it out, because that does have an impact on quite a few variables here, and I want to make sure that you get the right data. So just give me. By Monday, I'll have an updated version of this for you.
Yeah. Okay. Because on overtime, so correct me if I'm wrong on this, but our workman's comp is based on a 40-hour work week.
Okay.
Isn't it? And then anything on overtime doesn't go into, isn't calculated as workman's comp. Or am I wrong on that?
It depends on your region, but it's from my understanding, it's at least the ones in Canada, it's based on your insurable earnings. So it includes your overtime and all of that. So it would be everything, at least in Canada, Ontario.
And I'm in the States, in Nebraska, so I'll have to double check that. So
yeah.
Okay, thank you.
No worries, though.
Quick question, Leroy.
Yep, shoot.
So line items number 18 and 19, just to verify, those are taxes?
Yeah, so your tax contributions. Yep.
Thank you.
And again, this should be updated every year, right? Like I looked at what the 2022 rates, but these update every year, right? So you'll want to, at least in the new year, I'm not sure when they release the updated figures, but you could, you'll just want to make sure that at least like in the first month of every year, you're updating this.
Okay, and then one of those is probably like a Canadian federal tax, and the other one's probably like a, you don't call them states, but like a state tax.
It's employment insurance, unemployment. Canadians are a little more loving to their employees than the US, at least some states. We like to make sure, but with that comes more administrative headache. In many ways, but yeah, you'll just, the best way, if you're unsure of like what to put in here, again, just look at a pay slip, like look at your employee's pay slip or yours pay slip and go, okay, like what are the employer contributions that I'm making in the pay slip? If you've got a good accounting, payroll software or a good accountant who's helping you with payroll, they'll be able to tell you that information.
Thank you.
No worries. Cool. Any other questions? All right, as a last step, what I'm going to do is just show you where this information gets input into Level, because again, we will be rolling out, we're hoping by the end of next month, you'll be able to actually see some dollar values of labor costs within Level. So when you come into Level now, if you come into your crew section, in the crew section, what you'll notice is we've added this new job costing info section. So here, this is information required to know, like, is this a field staff? How are they paid? Is it variable, fixed? So in here, you would effectively just fill out what kind of employee it is. Is it an employee, a subcontractor, or a consultant? What department are they in? Are they field production? Is it an office, an owner? Was it a project manager? The pay type, is it variable, fixed, or do you just don't pay them at all? You would add their pay rate, their overtime rate. You can pull this vacation accrual type out of your payroll software, but ideally you should be asking, like, are you paying out vacation as they're earning it, or are you accruing it? That I think is actually a really good topic, because I don't think that's something you guys get trained on, is like the implications of not paying out vacation. That can be a significant liability on your balance sheet if you're not conscious of how big that value is getting. But anyway, coming to this vacation accrual section. So here what we would do is I would come into the spreadsheet, and I've added a little section here that just brings all these numbers to the top. I would add a 4% to this vacation accrual. And then I would add the other portion, which is the labor burden excluding vacation, which is 42.15. And then I can double check whether I've input the correct amount in by looking at the total labor burden, which is 46.15, and that's 46.15. And then you can just hit save. And if you've set this up already, once we release that feature, that will tell you your hourly, well, like your labor cost within a project by the dollar, you'll be able to actually pull that information. So the idea is, at least what we're playing with is, when you come into level now, instead of this being receipt bill total, it's going to say total expenses. And then when you click on this, you'll have your receipt bill total, your labor total, and then like combined total. So you can actually get that percentage of completion, which is important, right? Sweet. All right, so that's pretty much it with labor burden. You know, happy to answer any other questions. If you want to talk about stuff not labor burden related, happy to answer any questions pertaining to that as well in the last couple of minutes.
I have a question, just looking at this, what you're just showing us in level. For subcontractors that are joining level, do we need to do anything? I see that there's a role for that, but that wouldn't need to be filled out really beyond that, I'm guessing.
No, unless you want your, I mean, you could be nice, like, and have your subcontractors clock in and clock out. It's
they're getting paid piecework, so it'd be like they'd have a work order that's fixed. It doesn't matter how many hours they work on it.
Yeah. Okay. The other side to it is sometimes you do need to include a list of your, it's important to have a list of your subcontractors somewhere, right? And if they're open to accepting a level invite, that would be pretty cool.
I'm trying it out now. So
there you go.
With a couple guys. Yeah.
Nice. You don't need to worry about the payroll ID unless you actually give your guys an employee ID. That's not necessary. That's one of the fields that's not mandatory.
Well, does that help you guys line up anything, or it's still varying across payroll providers?
Yeah. Sorry, where is it? It's over here. It will if you're using WagePoint or some other third-party payroll provider, let one of your level accountants deal with that. It's something that we have in the roadmap that we're going to leverage. It's just it's a way for us to match what's in level, like what your employee ID is and your pay in level versus your payroll provider, because sometimes you can't use first names or last names, right? Because some people have the same names. Any other questions?
In QuickBooks Online, can you set up an invoice that shows, like, if you're working for a contractor and then which project it is? Like you could in desktop?
Yeah, you can. If you set up QuickBooks projects or you leverage sub customers, that's one way you can do it. So you can have like those are the two ways that you do it.
Okay, it's through projects. And you have a video on that, setting up projects.
Yeah,
I believe.
Somewhere.
Okay.
Yeah, something to note is, like, if you're looking for resources, if you come into the Facebook page, where is it now? Here you can access all our shared resources. So I've created a Google Drive here with all our shared resources, and then I'm going to start adding like these first Thursdays, the Q&A. I'll be adding those sections there too. Do click on this resource directory and it actually has a hyperlink to like a table of contents, QuickBooks, check the level. Some of our clients like E2 actually builds out SOPs with level and he likes to share them with us. So you can actually get information on, this is always getting updated. So you can find walkthrough videos, you know, SOPs, everything that we've collected to date. We're just building this document as a one-stop shop for everything.
That calculator that you just showed us, do we have access to that readily somewhere
Yeah,
within
so,
level on the Facebook page?
What I will do, I want to make that update to the spreadsheet before I share it. Unless if you're not concerned about overhead, I mean overtime, I can just put this in the chat right now. And then you just need to fill that out and it will get emailed to you. But I'll once I update the spreadsheet as well, I'll send a message in the Facebook group, say, hey guys, I've updated it to include overtime hours. So just fill out that form again and you'll get a copy of it.
Perfect. Thank you.
Yeah. All right. Any other questions?
I got one last one. Sorry, I'm taking up all the time. We have a guy that like cleans up our shop. He's like a high school kid, but he sometimes would work on sites and stuff like that. How would I input that information in level? Because like cleaning up the shop wouldn't necessarily be tied to billable work, but it's variable. Like if it's really messy, it takes them a little, like it's an hourly thing, but it's really only like an hour a week, so it's not factoring in a huge way. But
yeah, I'd put him in as office staff then.
Okay.
Yeah, if it's overhead. Oh.
Quick question, Leroy, just to verify, like Jordan was touching on earlier. So the subcontractors being a direct cost are not inputted into this labor burden, correct?
Yeah, it's strictly because again, it's employer contributions, right?
Got
Labor burden doesn't. If you're a subcontractor or a 1099 employee, you don't get any of those like employer benefits, right? Like you don't get any health care. I mean, unless one thing, I mean, if you are, do you ever give your 1099 guys trucks, like, you know, tools, or are they all sort of like required to bring their own stuff?
Yeah, no, I mean, sometimes give them some tools or, you know, gas money, you know, maybe some lunch, just like little one-off stuff. That's not a whole lot of money, but obviously could add up.
No, in that case, you can, I mean, you can inflate their cost a little bit, right? Like that's totally fine. If there are any like sort of, everything here would be zero, I would imagine. But what you would be looking at is, you know, like, again, like if you're giving them tools or anything like that, you could actually add it here, and figure out like how, like give it a small percentage to inflate. Otherwise, the alternative is, again, you could take those costs and factor them in as overhead, which we will be discussing. I'm pretty sure we'll have a meeting about that, a Thursday about that, where we talk about how to calculate your other overhead predetermined rate that you should be using. That's often known as your overhead factor or your break-even markup. Those are the other terms that that talks about. But yeah, in that case, if I were you, I'd probably I would just like ballpark it and say like, okay, if that 1099 employee is consistently working for you throughout the year, then you can actually give them a small labor burden percentage, like inflate it by 5 or 10%. Otherwise, if it's inconsistent, then just treat it as other overhead, and then that would be incorporated in your overhead factor calculation.
Perfect.
I know that I'm like jumping between a lot of technical accounting terms here. So like, if anything comes across as like, I don't know what Leeroy just said, I don't take offense, don't worry. My goal is to educate you guys so that you can figure this out on yourself. So, you know, if there are questions about any of the terms or anything like that, do let me know. Cool. All right. if there's no other questions, I'm going to let everyone go. Enjoy the rest of the Thursday. Curious, for our next first Thursday, does anyone have a topic in mind that they'd like us to cover?
Overhead.
Okay. Yeah, the other overhead allocation factor. Okay, cool. I'll get that sorted. We'll do that. Curious, in the team that's here, who charges like time and material or cost plus? Anyone here? Or some stuff is done that way?
Both.
Okay, do both. Oh,
Oh, yeah, both.
all right. And then who
Periodically.
has who's strictly service work? So very little materials, or has a strictly service work division in their business? Like I know Jordan's one.
Kind of, yeah.
Okay.
I incorporate that from time to time as well.
That factors
Trying
into
to
the
build that.
Okay, so yeah, there's that's a really good topic. I might actually break that into two. So it's one of my favorites, overhead allocation, management accounting. So good.
Super important.
Yeah, super important. Especially if you want to be confident in your pricing, right? So okay. Cool. Anything else before I let you go?
Thank you very much, Leroy. Have a good weekend.
No
Awesome.
worries. Yeah, love to see everyone. Cool.
All right. See ya.
Bye.
See you guys. Thanks, Leeroy.
Later.